Hello guys, so let's learn one more question under the same concept, weighted average cost of capital. In this question we need to find out the cost also. Okay, so let's see the question. Question number 35. Rajdhani Steels has the following capital structure. Okay, as in the form of debentures, it's having 11% debentures of 50 lakh worth, 10% preference shares of 10 lakh rupees worth of capital, 40,000 equity shares. We have each 100 rupees giving 40 lakh capital. So overall capital structure coming to 1 crore. So its equity shares are quoted at 102. So 102 here nothing but it's the market price of the share. Okay, market price of each share. Here they said 100 rupees each. This is the face value, whereas this is the market price of the share. And it is expected that the company will declare a dividend of 10 per share. Okay, on equity shares there the company is declaring 10 per share. It is expected value at the end of the current year, and the dividend is expected to grow at 10%. As equity shareholders being the owners of the company, they'll get the share in the growth of the company also. Okay, so how much is the growth? The 10% for the next 5 years. The company's tax rate being 50%. Debentures and preference share capital is considered perpetual. Okay, now coming to the first thing that they asked is like calculate from the foregoing data the cost of equity capital and the weighted average cost of capital. Okay, so let's see. So let's solve the question. Firstly, write down the title: computation of weighted average cost of capital for the existing capital structure. Okay, if you could see in the question, the first one is like in the existing capital structure you need to find out the cost of equity capital and also the weighted average cost of capital. Okay, the second B question is saying that you have raised an additional debentures of 30 lakhs and at 12%, and you have to find out the revised weighted average. Okay, and there is a difference in dividend rate, reduction in the growth rate, and there is a fall in the market price of the share. Okay, so this being the existing capital structure, this we need to find out weighted average cost of capital being the revised capital structure. Okay, firstly we'll do the first one, wherein we'll use the existing capital structure. First of all, write down the sources of capital as mentioned in the question. Okay, what are the sources that we have in the question are equity share capital of how much? The amount being 40 lakhs. This is as per the existing capital structure. Okay, the answer for first question. And 10% preference shares, amount being 10 lakh. 11% debentures, amount being 50 lakh. Okay, if you sum up the whole capital coming to 1 crore rupees. Yes, so now we need to calculate the weights. So as we already learnt in the previous question, that what are weights is how much the equity share capital is contributing towards the whole capital of the company. Okay, so how much is the equity share capital contributing? Just calculate the weight. Here see, 40 lakhs divided by 1 crore will give you 0.4. okay, so same like that, 10 lakhs being preference share capital divided by the overall capital being 1 crore is giving you 0.1. okay, and then 11% debentures are contributing 50 lakhs, overall capital being 1 crore is giving you 50%, that is 0.5. okay, this being 1.00. okay, now you have to calculate the after tax cost. okay, this we will write it as a percentage wise. Then we need to calculate the weighted cost. okay, so in the earlier problem it is very easy that the cost being given in the question itself, but here in this question we need to find out the cost. okay, so to find out the cost we'll be doing as a working notes. So the cost of equity will calculate first. Cost of equity share, if you see in the question, okay, we have been given dividend, market price, and also the growth. okay, cost of equity share will be denoted as KE. okay, so here we'll get the dividend, we'll term it as a D1, and MP, this is a formula. okay, you need to remember D1 being the dividend that we receive on the equity shares, MP being the market price, and what is the growth percentage. Okay. So as given in the question, how much is the dividend per share that the company is expected to distribute is 10. Okay, 10 per share. Market price being 102. Okay, and percentage of growth given 10%. Just do into decimal, 10 by 100. Okay, you'll get it as 0.1. Okay, overall I want it into percentage wise in the form of percentage, so I'm multiplying it with 100. So just calculate 10 by 102 plus 0.1, overall multiply it with 100, you'll get 19.8 percentage as the cost of equity share. Okay, now let's find out the cost of preference share. So what is the cost of, so the formula for cost of preference shares being, it is denoted by KP, dividend for preference share divided by the price. Okay, the overall investment that you made, you received through preference. Okay, so what is the dividend that we are receiving is, they said 10% preference shares, 10% preference shares, right? So 10 lakhs is the capital, out of that 10% being 1 lakh. This is the dividend amount, so just substitute 1 lakh is the dividend amount divided by what is the preference capital, it being 10 lakh into 100. Okay, so it will give you, just divide 1 lakh divided by 10 lakhs into 100, you'll get the percentage, the cost of preference share being 10%. Okay, now let's calculate for debentures. Okay, so after tax cost of debenture you have to calculate, because debenture being the borrowing nature, liability nature, we need to calculate it after tax cost, being the interest on the debenture being the tax allowed expenditure. Okay, so after tax cost of debenture, KD, which is the rate of interest, 1 minus T. Okay, in bracket 1 minus T into 100. This is the formula that you need to remember to calculate the cost of debenture, after tax cost of debenture. Okay, so as the rate given, it's 11%, we write it in the decimal form 0.11. Okay, and 1 minus, what is the tax rate given, 50%, so I'll write it in the decimal form 0.5 into 100. Okay, now calculate 1 minus 0.5 multiplied with 0.11 into 100, you'll get 5.5 percentage as the after tax cost of debentures. So this is the cost of debenture, cost of equity share, and cost of preference share. Okay, take it in the tabular format where you prepared. So after tax cost of equity share 19.8, and preference it's 10%, and for debentures it being 5.5%. Okay, so we'll calculate the weighted cost now. So weighted cost will be calculated 0.4 into 19.8. Okay, you'll get 7.92. Okay, this is already in the percentage form, so we don't need to again multiply the total sum with 100. Okay, 0.1 into 10 being 1. Okay, and then 5.5 into 0.5, you'll get 2.75. just sum to 7.92 plus 1 plus 2.75 will give you 11.67. okay, so this being the weighted average cost of capital being 11.67. okay, this is as per the existing capital structure. Okay, now we'll see the question and solve it as per the revised capital structure also. Okay, the answer for B, see, if you see in the question, assuming the company is raising additional debentures of 30 lakhs. Okay, already there is a debentures of 50 lakhs. Now you are raising 30 lakh more capital through 12% debentures. Okay, now we have to calculate the revised weighted average cost of capital, and also the few modifications in equity shares, also the few changes, like increase in the dividend rate from 10 to 12. Earlier it was 10, now it became 12. There is a reduction in the growth rate from 10 to 8%. Okay, now you have to consider 8%. Fall in market price of shares from 102 to 92. Okay, the market price has also fallen down. So let's consider the revised structure, revised capital structure, and find out weighted average cost of capital. Okay, so the same format, just write down the title: computation of weighted average cost of capital for new capital structure. Okay, firstly, the source of capital. What are the sources of capital? Equity share capital, 10% preference shares, preference share capital, and then 11% debenture, which is also there in existing capital structure, and then we have raised 12% debentures worth of 30 lakhs. Okay, so I'll write down the amount also. What is the equity share capital value? That is 40 lakhs. Okay, from the existing capital structure, just take down the values. 10 lakhs for preference share capital, debentures of 11% being 50 lakhs. Okay, as per the existing capital structure. Only thing that is added here is 12% debentures of 30 lakh. Now just sum up to get the overall capital. 40 lakhs being equity share capital, 10 lakhs being preference share capital, 50 lakhs is what 11% debentures contributed, and 30 lakhs being 12% debentures. So overall it is 1 crore 30 lakh. Okay, 1 crore 30 lakh is the overall capital. Correct. Now we'll calculate weights. Okay, how do we calculate the weights? As we did till now, it's 40 lakh divided by 1 crore 30 lakhs. Okay, so how much it is? 0.307. Same like that, 10 lakhs divided by 1 crore 30 lakhs. Okay, 0.077. And then 50 lakhs divided by 1 crore 30 lakhs will give you 0.385. I just made it into round off. And then 30 lakhs divided by 1 crore 30 lakhs, then 0.231. Okay, this overall being 1000. Okay, 3 decimals. Now you got the weights. Now the thing is, you have to get after tax cost, okay, in percentage. So same likewise how we did for question A, we'll calculate the cost of equity share, debentures, and preference shares. Okay, so here under the working notes, we'll firstly calculate cost of equity share. Same formula, it is denoted with KE, being dividend divided by market price plus growth. Okay, so what is the dividend that we are receiving? As you have seen in the question, increase in the dividend rate of from 10 to 12. So I am considering 12 as the percentage of dividend. Okay, market price being from 102 to it reduced to 92. Okay, then plus growth rate being reduced to 8%. So do 8 by 100, you will get 0.08, and I want this to be in percentage. So calculate 12 by 92 plus 0.08 into 100. So how much you got? The cost of equity 21.04%. Okay, now just calculate cost of preference share. Okay, so denoted with KP, dividend divided by the overall investment. So same, it's 1 lakh divided by 10 lakh into 100 will give you 10% cost of preference share. Okay, now we'll calculate after tax cost of debentures. Okay, for at 11% debentures, just calculate it's KD multiplied with 1 minus T into 100. So just substitute the value 11% is the value, rate 1 minus tax rate being 0.5 into 100. Okay, so just to multiply, you will get the answer as 5.5%. Okay, this we have seen in the existing capital structure also. So at 12%, same KD 1 minus T into 100, rate being 12%, 1 minus 0.5, the tax rate will be constant, into 100 will give you, just calculate and you will get the 6% as the value. Okay, now just take the after tax cost and then multiply, you will be getting weighted cost. Okay, and this is also in percentage, so just write down the cost here 21.0. so after writing the after tax cost of each one, just multiply weight with after tax cost for the respective one. So the weighted cost, just multiply weights with cost so that you will get the respective weighted cost. Then sum up weighted cost 6.46.77 plus 2.117 plus 1.386. Okay, so the overall weighted cost that you got, weighted average cost of capital, is 10.733. Okay, just write down as a conclusion, weighted average cost of capital under the new capital structure being 10.733 is a percentage. Okay, so thank you for watching.